Well, we're a bit more aggressive than the market. We're expecting 20 basis points from the ECB at its next meeting on the 25th of July. I think there are a couple of reasons why we feel they should be a little bit more aggressive than what the markets are expecting. Number one is inflation expectations. As you can see here, the measure of inflation expectations in the market is currently close to a record low. That tells you the risks to its price mandate is clearly to the downside. Secondly, President Draghi, at a speech in Portugal 3 weeks ago, said that in the absence of improvement, further stimulus would be required. In those 3 weeks, we've had confirmation of business sentiment readings falling further in Germany. We've seen factory orders coming in much weaker than expected, with the annual rate the worst in nearly 10 years. And it's looking more likely now that GDP will contract again in the second quarter. And over the last 4 quarters, we've had no growth in Germany. So the idea that the growth slowdown is temporary is no longer valid, really. And then finally, the ECB keep telling the markets that they have plenty of bullets in the locker when it comes to monetary easing. There's no better way to show the markets that than by going sooner and more aggressively than what the markets are expecting. Well, Christine Lagarde has no central bank experience, but she does have a lot of experience when it comes to global macroeconomic policy making. 4 years as finance minister in France, then she moved and became managing director at the IMF. So she's pretty solid when it comes to global macro policy making experience. At the ECB, from a central bank monetary policy angle, yes, perhaps more of the governing council members will become more influential in policy decision going forward, certainly over the short term. Philip Lane has just become the new chief economist. Perhaps he becomes more influential and more powerful in policy making direction going forward. Recent rhetoric from him would suggest he's in favour of proactive monetary policy, and that would lean us towards a more dovish short-term policy outlook for the ECB. From Christine Lagarde's political experience, that potentially has some longer-term positive euro implications. And Mario Draghi has already been calling for governments to play a greater role in fiscal stimulus to reinforce monetary stimulus. And that really hasn't happened yet. So perhaps Christine Lagarde will be more influential in persuading European governments to play a greater role in supporting growth going forward. And that's where Christine Lagarde could make a difference as president of the ECB. Well, I think if the ECB does cut by 20 basis points on the 25th of July, clearly there's downside risks for euro-dollar, and I think we could break the lows at 111. So short term, for sure, we're going to get a move to the downside. 20 basis points is not priced. About 2 to 3 basis points is priced for July, and therefore it would be a big surprise. But I think going beyond the initial near-term reaction, the reality is the ECB is simply falling into line with what's happening elsewhere. The RBA has cut, the RBNZ has cut, the Fed is going to start cutting on the 31st of July. Other central banks have shifted their guidance, and therefore the ECB doesn't really stand out significantly. And therefore I think the scope for a big move lower in euro-dollar is still relatively limited. And if the Fed follow up with further rate cuts beyond the 31st of July like we expect, then the euro could actually recover some of its near-term losses as we move through the remainder of this year.